What if I told you that the $3.9 trillion crypto industry as we know it today will be completely replaced by a sleeping giant, a $232 billion industry within the next 5 years? And what if I told you that most crypto holders have no idea that this shift is happening right now and right under their noses? I'm referring to the move from dead money crypto, where your coins just sit in wallets doing nothing, to what I call working capital crypto, where every dollar you own is actively generating income 24/7 around the clock. Now, this isn't speculation. The numbers do not lie. The math does not lie. While traditional crypto holders are hoping for 2 or 3x gains, this new industry is already generating 60 to 80% annual returns for people who understand what's happening. And that's on top of the price appreciation from crypto assets. I'm going to show you exactly what this shift looks like and why getting in early could be the difference between building wealth and actually getting left behind. So the current crypto market cap is $3.93 trillion at the time of recording. There's $166 billion in 24-hour volume. Now, when you do the math, the daily volume is roughly 4.2% of the overall crypto market cap. Whereas when you look at this small, little known industry known as decentralized finance, right, that currently has $232 billion in it, you're processing $16.8 billion in volume over the past 24 hours. That is a 7.2% volume to market cap ratio. Now, what exactly does that mean, you may be wondering? That means that there is more trading activity compared to every dollar in the industry in this little known industry. Now, that $3.9 trillion market cap, that's mostly dead money sitting in wallets, right? Waiting for prices to appreciate. Some of that money is completely forgotten and gone because it's been lost. This new industry with $232 billion is growing 10 times faster. It's like the shift from keeping cash under your mattress to putting it in investment accounts. But instead, you're taking your crypto from your wallet on a centralized exchange or whatever platform or wallet you're holding on to actually generating income on it. You're investing your crypto to earn more crypto. It's like how the stock market evolved from just buying and selling to dividend paying and now income generating for specific stocks and coming out with advanced strategies. This is an inevitable shift because money flows to where it can work the hardest. We've seen this in literally every single market, including the traditional markets, even in the broader crypto market. Money flows to where the best returns are. People start to sell out of Bitcoin and invest into Ethereum. That's the shift that we've been seeing over the past couple weeks. And then that money will flow from Ethereum to altcoins and follow the traditional altcoin season, right? Well, in this instance of the overall broader market, money is shifting from crypto to this little industry, but still a sleeping giant called decentralized finance, because money can work the hardest here. And I won't be diving into everything in today's video, but I did create another YouTube video that walks through my exact process for getting into this industry that will be linked at the top of the description. But for reference, in this industry, using something like Ethereum and USDC can generate you 95% per year, meaning that if you're investing $50,000, you could be generating $129 per day or $47,000 per year. Now, the beauty of that is that does not all have to be new capital. You can use your already existing Ethereum holdings or USDC holdings or convert some Bitcoin or even borrow against your crypto like you may have heard before. Now, you might be thinking, Jake, what exactly is this new industry? And that's the perfect question to be thinking, because most people have heard the name but have no idea what it actually means for their money. Maybe you've heard of decentralized finance, otherwise known as DeFi, or maybe you've heard of aspects like staking that are done in DeFi, or liquidity providing, or lending and borrowing, right? That's all part of the DeFi industry. So to simply explain it, with DeFi, you are becoming the bank, you're becoming the broker and the exchange, and you're earning fees on every transaction. That's what it allows you to do. DeFi is not a website, it's not a company, it's not an organization, it is an industry. Just like you have the traditional banking industry or the traditional stock exchange industry, right? Or what we would all bundle under traditional financial industry, you have this decentralized financial industry. And the main difference is it puts the power in the hands of the people. Instead of gatekeeping, having to make connections, right? And having to kind of work to become part of the system, right? And have tens of millions of dollars, if not hundreds of millions of dollars, even billions of dollars to be a part of exclusive high yielding opportunities. You can be a part of those opportunities by just simply having a DeFi wallet and having your crypto on that wallet. And that's the whole point of this industry. Anyone and everyone can access it, right? It's decentralized because it uses blockchain networks. Traditional crypto, like Bitcoin, for example, is buying digital gold and just hoping that it goes up. Whereas DeFi, you're taking that Bitcoin and you're earning more Bitcoin. So say we started with 1 BTC, which is $114,000 right now. Over time, you might have 1.1 BTC. And if Bitcoin stays the same price, you're at a profit, right? Bitcoin goes up, you're at a greater profit. If Bitcoin goes down, you could be at a profit, a break even, or maybe you're at a lower loss. But the point is you are accumulating more Bitcoins. So that way you could see exponential returns when the market starts to rip. So the simple analogy would be, instead of just owning shares of Apple stock, you become the stock exchange that Apple trades on. You have all the upside of the Apple shares, but you're generating fees and collecting more and more Apple shares whenever people go and sell it, or collecting more and more US dollars whenever people go and buy it. And again, maybe you think this sounds too good to be true. You're probably thinking, if this is so profitable, why isn't everyone doing it? And that's exactly what makes this such a massive opportunity. Not everyone is doing it. The barrier to entry doesn't require large capital, but it does require experience and it does require knowledge. Too many people dive into this industry, do things the wrong way because they are just trying to do it themselves, and they end up burning their portfolios and just thinking that the industry is a scam because it didn't work for them. And to be fair, most crypto holders don't even know that this industry exists. There's an education gap. You don't know what you don't know at the end of the day. So this opportunity is just hiding in plain sight. Traditional finance has kept these strategies for institutions only in that industry. But in DeFi, they become public to anyone and everyone. And the cool thing is the DeFi infrastructure is finally mature enough for regular investors to start to onboard. As more money flows in, returns are going to get more stable. They'll go down a little, yes, but they will still be significantly higher than what you can get in traditional finance. I'm talking 20% returns using stablecoins equivalent to the US dollar. You have institutional adoption. BlackRock, Fidelity are already moving billions of dollars into this space. The 5-year timeline, this shift will accelerate dramatically and start to see exponential growth. So again, one day the crypto industry might be worth more. It might be worth $10 trillion, $15 trillion. But the DeFi industry will be worth $3.9 trillion at the very least. Now I want to show you the potential returns and performance here. But to start off, I want to show you what it might look holding traditional crypto and just waiting for it to go up. Let's assume an estimated rate of return every year of about 60%. Remember, you're going to have some down years. You're going to have some years where you go 3-4x, right? Over the course of 5 years, your $50,000 goes roughly 10x to $525,000. You used to be able to do 10x in a single market cycle. Now that's not nearly as possible because you have the concept of diminishing returns. So over the course of 5 years, this is perfectly reasonable. But what if you could just bolster that just a little bit, right? And take that from 60%, which is just the price growth, to now doing 90%, right? Because you're earning income on your crypto assets and compounding that on your crypto. Well, now your $50,000 is going to $1.2 million over the course of 5 years. This is the compound effect of income generation and price appreciation combined to create a flywheel mechanism. So here's what's happening. We're witnessing the evolution of money itself. Just like how the internet didn't replace computers, it made them infinitely more useful. This industry is not going to replace crypto. It's going to make crypto infinitely more productive, but most importantly, profitable. The question isn't whether this shift will happen. The question is whether you'll be positioned to benefit from it, or whether you'll be left holding dead money while others are generating consistent income from the same assets. Now look, I've been in this space for a little over 4 years. I've seen every cycle, every trend, every next big thing, but this is not a trend. This is the fundamental evolution of how money works in the digital age. And right now we are still early. The $232 billion market cap, while seems like a lot, and it is, tells you that though. It is nothing in comparison to the total crypto industry right now, but most importantly, the growth of the crypto industry. But institutional money is flowing in fast. And once this becomes mainstream, the easy returns will be gone. Now, that YouTube video that I mentioned earlier, it's the DeFi portfolio optimization system. It's your roadmap to understanding and profiting from this shift. It's not going to teach you how to become a day trader or chase risky investments. It's going to teach you how to position yourself as a capital allocator in the new financial system that's being built right now. That link is going to be at the top of the description below, top of the comments. It'll be on screen somewhere right now. Don't wait on this. In 5 years, you'll either be glad you understood this shift early, or you'll be wishing that you had. So click the link in the description, watch the training now, and your future self will thank you.